Hey, what's up, everybody? I want to talk about TikTok tax tips. Try saying that 3 times fast. So you've probably seen these videos either on TikTok or it's the same thing in Instagram and Facebook Reels, where you hear some sort of dramatic tax tip that could save you thousands upon thousands of dollars in taxes that is some secret or something no one's ever told you about. So I want to do a series of videos where we talk about these TikTok tax tips, whether or not there's any truth to them, whether you need to just basically completely ignore them or dive into them and look at them. So the first thing is there typically is usually some truth in here, and we're going to pull that out and show you what the rest of the story is, because a lot of times they leave out a lot of details. And so we're going to go through that. Now, the second disclaimer is that I always say you shouldn't take any advice from anybody on social media, whether it be TikTok, Facebook, YouTube, including this video right here. My hope is to help point you in the right direction. But what I mean by don't take tax advice from anyone on these social media platforms is that in my videos, I often say, this is general advice. I'm talking to a generalized group of people. And even when I walk through some of these things and point out what is true and what isn't true, it's generalized advice, even that I'm giving. And you need to reach out to someone who can give you specific advice, since these are facts and circumstances driven most of the time. Let's jump in. Today, we're going to talk about what I call the fraudulent side hustle. All right. So you've seen this on TikTok, and basically it's the advice that everyone, I mean, you've seen this other places than TikTok too. And it's the advice that everyone should have a self-employment business. No matter what you do, whether you're a W-2 employee somewhere else or whatever, you should have a business for yourself so that you can write all sorts of things off through that business that you otherwise would not be able to write off. I saw a TikTok video today that said that it doesn't matter how much you make, as long as you make something through this side hustle. It said that even if you just make $100 through your side hustle, you can now write off your cell phone, your home internet, a portion of your home utilities, your vehicle. All right. That is, we're going to call this one 5% truth. Okay. This is ridiculous. That you could have a side hustle where you make a measly $100 in gross income before expenses, and now you can write off your entire cell phone, a portion of your home utilities, a portion of your rent and property taxes if you own your home, your vehicle. All right, this is complete and utter ridiculousness, and you should be able to spot this one pretty quickly. Now, if you have a self-employment business, it is true that you could take some of these otherwise necessary expenses in your life and have the business pay for them. But the key here is going to be, is there a legitimate business purpose? And also, is your side hustle an actual trade or business in the eyes of the tax code? All right. So if you have a business that is raking in measly $100 a year, I'm going to say that you do not have a trade or business, because you do not have any intention to make a profit. That would be a hobby at best, or just a complete sham and fraudulent at worst, where you might not only end up paying penalties and interest on these taxes that you otherwise should owe, but you may end up looking at jail time for just flat out committing fraud on your tax return. So let's take a look at the way to do this correctly. First, you have to have a legitimate business purpose with an intent to profit. Do you have something that you think you can make money at? And then, now that you have this side business, let's say that you're creating something, some kind of craft goods that you're selling either online or maybe locally at a farmer's market or just to your neighbors. But you actually think that after you take into account the cost of everything that is necessary, ordinary and necessary, which is the tax code language for business deductions that are legitimate, if you take into account all the expenses that are ordinary and necessary, such as the ways to communicate and to market this, the ways, the materials to create the items, and then to travel to sell them if you need to, or to ship them if you need to. If you take into account all your ordinary and necessary business expenses and what you think your revenue is going to be, and you think that you can make a profit, and you're trying to make a profit on this business, then it is a good side hustle or self-employment business where you will be able to report the income and deduct the ordinary necessary expenses. Now, again, if you're sitting at your house and you are creating some sort of goods, craft items that you are selling on Etsy, all right. Now, unless there's a way to contact you by phone, you have no need for a cell phone in this business. Now, you might say, well, I need to call to order my supplies, or I need to have the phone for some other purpose. Okay, we may be able to go that route. And I would recommend that you put a portion of your cell phone, if it's a Schedule C business, on that Schedule C, and that you reasonably estimate the portion of your phone that is necessary for the business. If you're using it 15% of the time out of all of your use for the cell phone, I recommend putting that on there. Your vehicle, again, you're sitting at home. You don't have to drive anywhere. Maybe once a week you have to drive to the post office to ship some stuff, or maybe even every afternoon you have to drive there. But if you're driving that car 1, 2, 3, 4, 5% for business and 95% of the time you're using it personally, no, you cannot write your vehicle off against that business. Again, we're going with what they said on the video, where they basically just said you can now write off your car. They didn't say a portion of your car. They implied you could put your whole stinking car against that business and create this giant loss, offset your other income, and lower your taxes. That's absurd. All right. You can track your mileage when you go to the post office and back and put that on and get a deduction for the standard mileage rate. But that business should not own your vehicle, because your vehicle is used predominantly for you for personal purposes. So you cannot do that. A home office. All right. This is where we get into a portion of the utilities, rent or mortgage interest, property taxes, depending on if you rent or own your home, insurance, payers. This, again, you can have a legitimate home office. The IRS says it has to be used regularly and exclusively for your business. So again, if you've got a business that's taken very little of your time, and you've got a desk set up on your coffee table in your living room does not become a home office. First of all, it's not exclusively used. If you're in a guest bedroom, your guest bedroom is not exclusively used for business. Now, a portion of a guest bedroom can be. It does not have to be a whole room. You could have a 5x5 corner of a guest bedroom that has your desk in it, where you're doing your admin, your shipping, your label creating, whatever you're doing, a sewing machine, if you're creating things that could qualify as exclusively used for business. Now, regular, all right, that's one that actually we need to dive a little bit more into. We're not going to do it in this video, but regular use. Again, if you were doing this for a couple of hours, part of the year, that's probably not going to rise to the level of regular use, So we need to make sure that we look at the facts and circumstances to make sure you qualify. Home office is significantly abused. The IRS goes after it. There is a safe harbor method of $5 per square foot. The flip side of this is it's not going to save you that much. Now, if you have a legitimate use, regularly and exclusively used home office, call it a bedroom in a 2-bedroom apartment. You're single, you have a 2-bedroom apartment, and the percentage of the apartment that is exclusively and regularly used as a home office is a large percentage of the total square feet of that apartment, you're going to get a pretty good write-off for the home office deduction. You want to definitely make sure you document that, because it's going to be significant. Now, if you have a larger home with a small home office, you're not going to get very much here. If you use the safe harbor, maybe you have 100 square foot up to 300 square feet, which is the max to use the safe harbor of $5 a square foot. You're talking a $500 to $1,500 deduction, which, depending on your tax bracket, is going to save you somewhere from $100 to $500 in taxes. All right. We're not talking about, earth shattering numbers here. So again, we're calling this one partially, actually we're calling this one hardly true at all. There is some truth here, but again, the key is going to be it's ordinary and necessary for your business. And it makes sense. You have an actual trade or business where you're intending to profit. You cannot just say, charge you $100 to do this thing one time. Now I can write off everything from my home expenses to my cell phone to my vehicle. That's complete garbage. You're not going to be able to do that. My name is Brad. I'm with Wooten CPA. My goal is to bring peace to your tax and accounting responsibilities. One of the ways I do that is through these videos on YouTube. Please like and subscribe to the channel so that you get notified of other videos when they come out. Thank you for watching.